Everybody, top four largest banks in the world have $19.8 trillion under assets. Of assets, I guess assets under control, I guess you might say. And look at that ghosting monster, yeah. 19.8 trillion. And you know what? Not a single one of those top four banks is a US bank. Not a single one. Is that surprising to anybody? Is that surprising? The top four banks in the world, none of them are US banks. Dun 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 dun. Check this out right here. Look at that. Largest banks in the world. Anybody see the top four? These big red ones right here. Those are all China banks. Interestingly enough. And looking at this right here. Number one, Industrial Commercial Bank of China. Number two, China Construction Bank Corp. Number three, Agricultural Bank of China. Number four, Bank of China. Then number five comes in JP Morgan. So right there, the top four banks in the world controlling $19.8 trillion of total assets. That's kind of mind-blowing to me a little bit that China has amassed that much under their control. Now, is it real money or is that, fluffing up for China? I don't know. Not here to say which one it is, but still pretty wild when you look at that. There's the biggest 50 biggest banks in the world right there in bubbles by size. And I mean, it's pretty interesting. To me, it's interesting. We always talk about how too big to fail our U.S. banks are. J.P. Morgan, Citibank, Bank of America, Wells Fargo, Goldman Sachs, Morgan Stanley, basically our top six, and they all kind of pale in comparison over here. So quite interesting. I find it. Now, what does that mean? Well, it means maybe despite the U.S. being this financial hub of the world, maybe something else is going on out there. Maybe somebody else taking over the top spots here. I mean, they're obviously claiming 1 through 4 right there. 5 and 6 are American companies. Then jumping on down, Citigroup, number 11, and jumping on down, Wells Fargo, number 16. So there you go. There's the top 20 right there, with all with assets over $1 trillion. So, and hey, I mean, just thought it was something interesting. Now, another thing interesting, we've heard parroted in the media a whole lot about this Mag 7, right? Well, check it out. There's only 5 of them right now sitting here. This is year-to-date performance. No grouping. We can group it by sector, but I think it's more impressive this way. Here's there's 5 of your biggest companies. Magnificent 5. Yeah, Eli Lilly over here coming up on a heater, and we'll see where that goes. So, somebody was speculating that Oracle, which I didn't even see them by logo immediately, Oracle should pop up above the trillion mark. That's going to take a huge amount of money to do that. So this is just by company size in the block. Thought this was highly interesting. I just came up with this a few seconds ago. Now, where are the other out of Magnificent 7? Check this out. You got to turn it on to get the other 2. So Apple and Tesla down more than 3%, while the other Magnificent 5 are up. So check it out. That's just wild right there. Absolutely wild. So if you're like, JT, simplest form, what should I be looking at? Look at the stuff that's performing year to date. All right, you can do it by the month. You can do it by the 3 months, whatever it is. I usually take and turn off everything down, everything underperforming by 3%. I wish this had more scale, 5 or 10%, but it doesn't. There you go. This is the stuff to pay attention to. And if you wanted to see it a different light, there's by sector. Now, the stuff to not be focused on is probably right there. The stuff that's down. Could those turn around? Sure. Would these be ones to watch for bottoming? Sure. I mean, there's always opportunities, but if they've already started out and year to date, basically at the end of the quarter, why am I doing this? We're basically wrapping up the end of the quarter this week. These things have already shown that they're not performing this year. Now, do we expect them to turn around? Maybe, maybe not. All right. I just want you to focus on things that are like, if you're going to trade long, you're going to be holding stuff. Don't hold the stuff that's being, doing garbage charts. This is essentially a fast way to tell what's not performing. All right. Fast way. You may be like, how do you get this? You come up here to products. You come down to heat maps. Come over here to stocks. And you get this chart. It's a stock heat map. You can pull this up in several platforms have this also. FinViz will do a similar thing. But if you have a TradingView account, even a free TradingView account, you can pull it up right here. And I'm just looking at the S&P. I mean, you can look at it different ways. They have different things you can look at, Russell and whatever. Just look at the S&P right now. Big broad swath of the country, of the companies, and right there, these are all the underperformers so far this year. All right, any questions? There you go. It's one way to kind of look at what might not be the best stuff to be chasing after. All right, they're not bottoms until they start actually going up. Otherwise, you're just catching the knife here. All right, especially on a strong year that like we've had so far this year. If you're chasing after stuff that's just plummeting down, you need to be careful out there. All right, now all trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. This presentation here, intended to be informational, educational, fun, entertaining. It is not a recommendation to be buying or selling anything. All right, no financial instruments, no stocks, no options, no bonds, no forex, no futures, no cryptos, no treasuries. Don't long them, don't short them, don't trade them. Don't buy stuff from gurus if you don't trust them. All right. Make sure you trust the people you're buying stuff from. And I do appreciate everybody supporting me and keeping coming back for more information. But if you desire personal financial advice, it's not what I do. You need to hire and consult a financial advisor. I'm not telling you what to do. I'm just showing you some stuff that I pay attention to all the time. All right. Now, S&P. S&P. This is... we hit that 1618 in that last kind of major, the big pullback right there that we did in 2 days. Hit the 1618 extension, turning red off of that. That could be it. We hit the 5250. I mean, that was an extension. We may need another pullback of a similar size. Easy way to do it. Just draw a line off the prior pullback. Come down here. That puts us a potential to come right back down. I can remove all these targets now that we've hit them all. Come right back down to the top of this box right here. Entirely possible. Entirely possible. I kind of, as we went through it last week, I was like, this is going to break bullish. And then that's exactly what we did. Came up, tagged that extension at the 1618. Now what do I expect? Not a lot. Not a lot. We're kind of done at this point. As far as targets go, we could shoot it on up to 5350. Just other things. If NVIDIA becomes the largest company, we'll probably be up here around 5500. It's got a ways to go for that. NVIDIA, of course, hanging out right here, showing a little chop. It's a lower high so far, and be careful. Look at it this way, put it in the right proportions, right? Kind of like that. Looks a lot like, starting to look a lot like this. Had a consolidation, went on an extra super hype pop. See this consolidation, drifting higher, then an extra super hype pop. Now, can the pop go higher? Absolutely. Absolutely. See, we in fact had a little bit of shopping here, and then it went even higher. But then the party's over, and we don't go higher anymore. All right, be careful. Don't get caught. Don't get caught. Whenever this party stops, eventually we're probably coming back down to this 350, 300 to 400 area. Eventually. Back where we consolidated over here. Possibly lower than that, but I think we probably stop down here somewhere. 3 to 4, maybe 500 area. Somewhere where we found this consolidation. We gapped up right there. Somewhere we'll probably retest sometime out here. Maybe not this year, maybe not next year. Eventually we'll probably come back and test this zone. You can think whatever you want to think about AI and believe all the hopium. We're likely to see this come back. All right. Be careful out there, I'm saying. Now, if NVIDIA becomes the largest company in the world, we'll probably see it hit 1250. If it does that, what goes up may come right back down. All right. Kind of becomes simple as that on a bubble. We could see this pop right up here and then come right back down. I mean, it's foretold right here. All right. This is just we as humans and our subconscious herd mentality do this. We do this over and over and over. And maybe we've seen it on Tilray, we've seen it on GME, we've seen it on, look right here, already starting on the down. We popped it up, made the lower high, already starting to work it back down. So this thing, this pattern, I'm telling you, if you forget this pattern, you're doomed to get trapped in it at some point or another. Now, if you're lucky enough to get in on it here, write it up in here, and you're pretty thrilled, you start dreaming about how much money you made, how much, I'm going to be so rich, I'm going to be able to pay off my house, I'm going to pay off my cars, I'm going to do this, I'm going to buy vacations, life's going to be easy. If you start thinking that way, if you ever start thinking that way about a trade, it's time to close it. It's time to book the profit. All right, I'm serious. Like this was shared to me by another guru years and years ago. If you are in a trade and you start dreaming about how awesome it's going to make your life, it's time to book that profit because it's about to be, you're probably getting close to here. It's about to cause you some pain if you don't book that profit. 100% serious right here. All right. DWAC, and that's another one. It's a little bit more volatile, but likely to come right back down. Lower highs. Watch out. Watch out. It's volatile. Could you make a few bucks on it? Sure. I'm not saying, they're not tradable. I'm just saying don't get stuck in one of these, all right? Watch out. When they come down ferociously. All right. Moving on. Calendar for the week. Not a lot happening. I mean, we get some FOMC members. We get some, I think PCE comes out later. GDP comes out. Just not a lot, really. We get core PCE right there. They only have one little blurb on it, This right here, GDP, final GDP, that, I think it's so baked that it's not going to matter. And then consumer sentiment again, it's like they revise consumer sentiment every week. I don't know. And then it's core PCE, that's personal consumer expenditures. Powell likes that number better than he likes the CPI number. I don't know. They both seem to be different measures of the same exact freaking thing. They take out all the things that we actually spend money on both of them. I don't know that it necessarily matters either way. They're probably going to keep those numbers baked right up through the election. And anyway. All right. I'm not a fan of keeping live stops in the market, except when I'm day trading. Crazy stuff happens, and I'll just leave it there. Anyway, moving on. S5FI bounced off of that 80 level pretty violently. While the S&P made that higher high, we did not see stocks above the 50-day. That's just stocks, S&P 500, stocks above their 50-day moving average. We did not see that making anywhere close to a higher high. It's a lower high, very cautious. We bounced off of it very solidly off that 80 level. And why 80? Well, when you zoom this baby out, look at the long time frame here. We don't hang out above 80 very long, ever. And we don't hang out below 20 very long, ever. It's kind of the reversal point, right? We spend a lot of time in the middle, very little time at the extremes, and we tend to oscillate between the bottom and the top. We come out the top, we tend to head to the bottom, and then we head back to the top, and then we head back to the bottom, and then we head back to the top. So it's a big oscillator for the market. I've kind of thought for 3 months now this year that we're probably going to return to the bottom. Be careful out there. It can go fast. We can get right back down there really, really, really quickly. Make sure you have an exit plan. Stocks above the 200-day made a higher high, barely. This one had not been over 80 since back here when we did the market top. Now this is another interesting one to me. This is stocks above their 200-day moving average, S&P 500 stocks. We had not broken above 80 the entire rally from down here in that October low all the way up to now, even though we made a higher high in the market. We just cracked it in the last week or so, and we couldn't even hold it. And so that was Thursday right there. Friday right back below. We poked above on Monday, the 11th. Something's up. Something's up. All right, be careful. Be careful. This does not show strength in the market. We could get one of these. This is what's really freaking me out right now, is that we have a very similar setup to what we did in 2020. A lot of the things, like JT's like serious right now. A lot of the things I'm seeing are starting to line up just like what we had in late 2019 coming into 2020. Anybody remember what happened? COVID was the excuse. The market needed that retrace. Same situation we got cooking right now. What's the excuse? Not sure. The market needs that big, swift retrace. Could we get another COVID-like drop? We absolutely could. What's going to be the cause? I don't know. Not seeing much showing up right now that might make me think that, but we could have banks blow out. We could have some kind of war breakout. All sorts of things. Russia, Ukraine, proxy war for the U.S., but all of a sudden, ISIS bombs Russia on Friday, and now NATO and Russia are kind of aligned on a common enemy. Interesting situation. One little event in the world changes everything. Stocks about the 20-day. I thought we'd come up here and top and hit again. Oddly enough, this looks a lot like the S5FI. That one did not get even higher. Watch for that one to plummet out. It's like this is the canary. This one's a little bit slower on the S5FI, and then this one's the real slow one. 200-day. Takes a while for that one to move. ES overnight. To jump down to the time frames. I got so many fib lines drawn on here. It's getting ridiculous. Let's just start removing a bunch of stuff. And zoom her up. Oh, it blasted through that target. No problem, baby. Blasted through and came right back down. Kind of funny that way sometimes. So at this point, we're watching for what happens here. So far, that's non-telling, overlapping price action where the highs overlap the lows of the previous move. That doesn't tell you a whole lot about what price wants to do next. It's just kind of a corrective, overlapping action. So far, that can just set us up to go higher again. And we saw that right back over here before we popped again. And choppy, drop. Took a few days to correct it, and then we popped. So this could lead to some more choppy price action for the rest of the week into April. Then we'll see what happens. If there's an update, I'll tell you tomorrow during the morning monster. So far, neither one clear. This looks more like a 3-wave down. Could lead to more extension higher on NASDAQ. We came up shy of the targets, shy of the top of the channel. If we break back, if we start pushing lower and break below the low on the channel, that's the initial warning that maybe this thing isn't going as bullish as it was set up to. Barely poked the higher high and immediately started retracing. That's showing some weakness in that's the NASDAQ 100. That's like the 100 best of the best companies, essentially. Been up like 14 of the last 15 years. NQ, you don't know what NQ is. It's just NASDAQ futures. Why futures? Because it shows me the overnight action. This thing opened up at 6 p.m. yesterday, Eastern time, 6 p.m. Sunday. It's been trading all night. Showing a little bit of weakness here. Now, looking at this right here, this high, this low, this high, like that. Support on down here around 18.4. Come on. Keeps grabbing that. Somewhere right around there is support. Also happens to be a 618 level. Could find some support here, blast up, go hit more targets on the upside, or it could start breaking down below the bottom of this trend channel thing that we've had in place for all year, I guess. We start getting below that. Watch out for the bigger retrace. There you go. You can see the trend channel we've been in kind of all year. We break below that very quickly, could turn south on us, take us back down to the roadmap line. And if we don't hold that, bigger down. So just throwing this out there. Be careful, all right? Interesting conversation in the chat about trailing stops and stuff like that. You just gotta be careful. Trailing stops are a market, like pretty much all trades are a market order. There's no, like, even if you have a limit order, the actual execution is always a market order. Messes with people's mind, but that's how you get slippage and all that sort of stuff when they talk about it, is your order gets triggered at the price, but when it actually goes to the market, it's a market order. And if price is moving fast, you can get slippage, and that's how you can get fills significantly different than your stop price. It can be significant in a fast-moving market. And if there's a halt involved, watch out, baby. That can be really vicious. So Russell still hanging out in a similar channel, but this one way less bullish. And this is doing that. Remember, I was just talking about on the ES, the S&P 500 futures, how we were getting that overlappy stuff, and it was going down. Look at this. We're getting overlappy stuff up. You know what that means? It means this is some sort of correction heading up, which means continuation is down. Now, when does it break? I'm not sure. But when we see this overlapping, this is like warning me that we could see a big down. And the big down could take us lower than any low we've had since we started this correction. Very cautious here. Could result in something down here around 1340, possibly 1100. We're like, how do you trade that though? Well, it's IWM is what the index here. So we could be talking about prices down to significantly lower than this. That was the last thing I drew, but if we actually grab this, golly, that little bar on the bottom really liking me today. Really liking me. That low, this high, we could be talking about 130, possibly 106 on down here. If we break it down, if we break down out of this, could very quickly turn into something deeper. All right. This is weird. I thought I heard an alert. Oil futures. This one's also doing a very overlappy situation. Now, this trend could continue for a while, and if we break out above the top of this channel, it's game on for going much higher, much faster. I think at the minimum, we're going to come up here to this 85 area and possibly on up here to 90 on the current move. I think I'm kind of feeling that we're going to break out and go test this. And when you look at the bigger picture on the weekly chart, you go from the high to the low here. Zoom this baby up a little bit. The high to the low. We have this 618 level sitting right up here around 105. Entirely possible we're going to go test that. If we get above it, sets us up to go significantly higher. We're talking 115, 120, possibly on up here like 150, 170. Ridiculous levels, 200. Let's not get too optimistic here. We got a lot of resistance to go before we get there. But prices of oil could go a little nuts on us if we start breaking out of this consolidation we've been in for forever, it feels like. Oil can turn really bullish. Now, what does that do? It really affects inflation numbers everywhere. They won't be able to hide that kind of inflation. All right. So prices of oil go in everything. So GC coming back a little bit today, finding support there on Friday. Yet again with a higher low. Had that pop, had this drop, and right down to the bottom. Got resistance right up here, 2200. If we get above that, next extension, 2240. Simple as that. That's the pullback. That's the next extension. Bitcoin. Halving event coming up. That's the main event. But what are we going to do between now and the halving event? Volatility. All right. This pullback right here that we did, just a little bit bigger than the pullback we did right over here. Just, 3 weeks ago? Tuesday, 3 weeks ago, we did this giant one-day pullback. It's like, whoa, are we going to get a 10,000 point candle in one day? We almost did. Pretty darn close. From the high to the low. Yeah, it was all like, just over. Like that candle was just over a 10,000 point candle. 10,075 point candle. So this pullback right here, a little bit bigger, about a 13,000-ish pullback. Almost like a 1.272 bigger. Holding the bottom, made a move up, made a higher low. Kind of tilts the odds if we can get above this 618 level, right around 69.5. We're probably going to go on up here, maybe 77, 82-ish. That'll be the next upside target areas if we can get above this zone right there. Now, if we start breaking down, we could go visit the roadmap line here. And that would be down at 48. Well, probably by the time we get there, probably around 48. Gotta keep climbing. Just keep dropping. We meet up somewhere over here, probably in front of halving, if we're going to do a bigger retrace. So that's kind of the two potential paths. What I do expect, I don't necessarily expect higher or lower at the moment. We are kind of set up for it going higher, but we got to break above that level right there. Chop. Up and down, volatility, big candles. I mean, 3,000-4,000 point days, nothing for Bitcoin. All right. It's not clear between now and after halving, we're probably going to get a disappointing pullback, similar to what we had on the back of the ETFs getting approved right here. All right, we had this pullback. Everybody's like, I thought it was bullish. I thought Bitcoin spot ETFs were bullish. Got this sell the news. Found a bottom. It was all the way over here before we actually broke higher. From there over to here before we actually got higher. Took 32 calendar days, 21 trading days before we broke out and started rallying. Now we made the bottom a lot quicker. We made the bottom in 7 days, 12 calendar days. And this is just futures for Bitcoin. Why futures? Because it's a certified price. Bitcoin itself depends on the exchange. Prices can be all over the place. I like to go to a certified price for Bitcoin, and then the only real certified price I know of is in the futures market. All right. So right now, potential to go higher. How might you trade it? Well, there's a crap load of tickers that we're about to find on the list here today, involved in Bitcoin because it's up today about $3,000. Ethereum looks a bit weaker. Now there's something else in play on Ethereum. The SEC has opened an investigation to classify Ethereum as a security instead of a commodity. This is very, very important. You hear me right now. There are spot ETF applications out there. May is the deadline. But the SEC has opened an investigation into Ethereum to change its status from a commodity to a security. At which point, there is no spot ETFs going to ever be approved. I was warning that this chart looks a lot more bearish. We came up to, while getting above the 618, kind of tilts the odds that we're going on up here. This price action looked very bearish to me. This little extension here, this may have been it. Like this, we could actually see this thing plummet down to this 500 level down here. Just want everybody to be very, very careful right now. This will be a fundamental change. And I've said for a long time, there's some fundamental differences between Bitcoin and Ethereum. The fact that Bitcoin is not controlled by a single entity and Ethereum is a major difference. And one of the key points that the SEC is hinging its investigation on. So if you're heavy in Ethereum, please be careful. Know where the exit door is. Dollar. Dun, 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 dun. All crypto is not created equal. Dollar. It's in an interesting, precarious place. We've tipped the odds. It's 70% likely we're going to get this rally up here. It still leaves 30%, just like Ethereum, 70% odds we're going up, but 30% chance that we just fail and go lower. I'm thinking the dollar might launch off here. We might pop on up to 105. That would make this a big three-wave up correction-y thing. We could actually see the move extend even further than just right there. We could actually see the move head on up to 106 possibly. So this first move up would be the same size as this second move up. Talking about this move right here. If we got to 106 area, same size move. We see that a lot in the markets where we get these equality of moves, echoes of prior things. MSTR rallying a little bit today. Can we go on up, climb the fib ladder? 2,000? Maybe. 2,500? Maybe. Is it highly dangerous? Yeah, a lot. Be careful on that one. This is playing with fire. Quite seriously. That stock chart looking a lot like this. Even for being all in on Bitcoin, that's moving a lot. Be careful. Could this be the top? It could be. Could it do another whole big extension? Blast on off way higher? Absolutely. Be careful though. That's playing with fire. MASI, Massimo, medical field. Anything in the medical field, be careful. FDA messes around in there. It did the gap fill right there, popping above. If it can hold above, could go on up. But at this point, not looking the strongest. I would be very cautious here. Grab the fib tool right there. We're sitting right at that 618 level. We reject that, we can go on another move down. Could be something like first move down, retrace to the 618. Next move down could take us down in this 32 area on Massimo. Boeing, entirely possible that that was the lowest low we get. I would like to see it go just a little bit lower to make everything nice and tidy, but it's in the reversal zone. Like that's bottoming here in the vicinity of that bottom can set us up bullish. The first indication that we're actually going bullish from here is when we break above that roadmap line on the daily chart. We can be kicking it off for a large upside potential. About 357 in the near term or way on up there in the bigger picture. Could be looking at targets up here around 600. All right. Get some alerts going on here. Coin. Looks like we may push on higher. Resistance zone right there where we consolidated back here. Get above that. Prices on up. 538, 676. UTHR. That's choppiness. Remember what I was saying about S&P? It's just bigger swings here. Where we have the lows overlapping the prior high and the prior, like it's just overlapping and it's drifting lower with lower highs. Pharmaceutical medtech is just not something I want to get involved in right now. It's not. It's probably not ever going to be. Holding the 618, holding the 618. BitX. There's your, how do you play Bitcoin? Right there. You got to be careful though. We could drop back to this 25 area. We could pop out to 64.70. Beautiful upside. High risk downside. Know when you're wrong. This is a 2x leverage. Leverage can cut you both ways. And you need to be careful. There we go. Be careful on leveraged instruments. Be careful playing options on leveraged instruments. That's really leveraging up, amping up your leverage, lamping up. So be careful. ARC B, getting a nice little pop, but not really moving. It's just dividing Bitcoin by almost 1,000. And that's kind of the prices of ARC B. That's a spot ETF. If you didn't know, their assets under management around 2.6 billion, as compared to IBIT on down the list a little bit. It looks like you divide by 2,000 to get those prices, and their assets under management sitting at 15.8 billion. Now, if their 1% allocation thing, if they actually follow through with it, we're talking about potential for this to go to 120 billion, which would be a lot more Bitcoin. A lot more Bitcoin to give that 120 billion assets under management. And rocking back up. APH going on. Extension higher. No targets, no real clear anything at this point. We're up here in clear air going exponential. All I can say is keep that chart in mind. Some point we're going to retrace and then we can reevaluate a position. Right now, thing super sensitive on the taskbar today. We're up here, clear air. Next target up could be 138, but we're kind of in clear air until we get another pullback. GBTC, that's a grayscale. That's a spot ETF that converted. Now the big thing to concern here is the assets under management. They're doing a lot of liquidation, and the reason they're experiencing a lot of liquidation is because their expense ratio is 1.5. That's a crazy high expense ratio, especially when you consider it to other options out here like ARKB, no expense ratio. IBIT, right here, very low expense ratio. BITB, no expense ratio. So keep it in mind. FBTC, Fidelity. Now, if you want to get involved in these spot ETFs, you're going to hold for a while. I do recommend that you spread around your fiduciary. If you have no idea what I mean, Fidelity is their own fiduciary. ARKB, which is ARK, and BlackRock, IBIT, they both share Coinbase as their fiduciary, and you should check in to the prospectus. Who is the fiduciary? All right. Like if Coinbase got hacked tomorrow, it's going to be a horrible situation. But if your fund is at Coinbase and it gets hacked tomorrow, all the Bitcoin's gone. There's no insurance for that. All right. The likelihood that you get hacked everywhere, if you have some at Fidelity, some at Coinbase, some at Gemini, those are all fiduciaries for these spot ETFs. You're less likely to get all your money taken. All right, less likely. MLGO, you can still think that it's a big scam and Ponzi. Reverse split, that sets that up for dumpster fire territory. Pretty much that's what that looks like right there. That's the last piece of the dumpster fire puzzle. That probably, maybe not today, maybe not tomorrow, but going to continue plummeting lower because reverse splits are not bullish, period. EETH, there is the futures-based Ethereum ETF that we have currently, and looks like it wants to come back down to the roadmap line, which I wonder why the roadmap line is not drawing. Oh, not enough candles. There we go. Back down the roadmap line area. DWAC, like I said a few minutes ago, probably going down. Already talked to IBIT. That's just Bitcoin by a divider. BitB, Bitcoin by a divider. You can see those two charts look identical. Baidu, chopping down here, trying to find support. That's China stuff for you. If we break down below this zone, probably going down in a blaze of glory. If we can break above the roadmap line, which we've been not even getting close, making lower highs, lower highs, lower highs. If we get above that, we could be looking for moving up here and testing this resistance we had back in last summer. Not looking bullish so far, but not really indicative of any direction at all. Actually, just looks like we're going to keep going this way for now. PDD, that was a rejection. Kind of a bummer. As long as we can hold above the roadmap line, it still gives it a chance to go higher. If we break down below this low, we're probably coming on down here. 101, possibly 91. If we can get back above this, resistance now, upside target up here, 177, 185 potentially. Decliners list, AMD, rallying back a little bit after dropping in the pre-market, probably coming back down here. We may see some of that volatility. Remember this chart right here. After we get crazy euphoria, we kind of get an initial drop and some chop a little bit, and then we plummet on down. So that may be where we are in AMD. We may start seeing some chop in here before we come on down lower. How long? I don't know. Could take a while. AEHR. Oh. Anthony, are you on here? This one you were fascinated in. I would be very careful. It could find support in this zone, but be careful. It also could break down below that zone of support and head down here. AMAT 225 looks like wants to tag that 225 zone. SOXX probably going to give it up some point. This is a semiconductor ETF. And be careful. ON. It's kind of a toss-up. Do we pop or do we drop? We're below the roadmap line, so odds are drop, but we got to get below that 618 level to do it. 56 be the target. FN. It's like wants to touch the roadmap line again. That came up lower high. 30% fail potential. Although we could just bounce off the roadmap line and go again. Sony. Ooh, bounced off the roadmap line. We break below this area right here. It's game on. Extension. 74 down. mRNO. My gosh. Don't play with this stuff. Highly likely to come back to that $10 resting spot. It's like a heartbeat. It was dead. Made a heartbeat. Probably come back to at least 10 or 11. TECL. Probably coming back down here sometime or another. INTC. Right there in the roadmap line. Check it out. If we can hold right there. Man, sometimes I get lucky. It's a pattern. This is one of my favorite patterns. This right here, that right there. If we can hold, turn back higher, break above these highs, back above that 618 level. So we're talking about, I'm actually going to set an alert for this. 47, back above that 47 area. 54, 59, next upside targets. Right up here. Is it a buy right now? Absolutely not. That's a falling knife. Could it go a little lower? Absolutely. We could come on down, bring that 618 level down a little bit. It also pushes the target up a little bit. That's the beauty of a deeper retrace. Right now, we're looking for a move above 47, target 54 area. But we got to break above some stuff, all right? Minimum, most aggressive entry you could do. A move up through this 44 area. Got to move up through there. Then we got to get through this. Then it tips the odds. Once we're up here, 70% likely to go on the extension. If we fail at any point, we can do something more bearish. And retesting this consolidation level right there might be what we go do. All right. This is one to watch. And I'm going to set an alert here too, just because I'm curious at this point. ALB, nothing. That's a bearish chart. Probably going to go lower. Target's on down lower. 85, possibly 70. UAL, ugh, gnarly chart. It's grinding the roadmap line. Pop it a little higher, pop a little lower, pop a little higher, pop a little higher. Ugh. Grindy, overlapping, choppy stuff right there. Corrective. I don't like it. Don't like it one bit. Wouldn't long it. I wouldn't short it. I wouldn't mess with it. That's unreliable. You see right here, we did that same sort of grindy stuff and then dipped and then popped and then this could break down. It could break higher. I really don't know. It's likely to get a dip, come make a low somewhere near this prior low over here before it pops out of here. That's what the most likely scenario is, that whenever this finally gets to the end, we get a dip down here in 37 area before we get a pop. And the FAA basically throwing some smackdown on them today. If you didn't know, FAA scrutiny on routes and pastures and safety. So that's what's going on. All right. Bias for the day. I'm still thinking we're due a correction. If we can get a fair size correction, 3%, we can push higher. If we just keep grinding, it's going to be a rough slog we just keep grinding. So I do kind of expect us to retrace back down to this 5150 area. If we can get on down lower, say maybe down below 5080, back kind of where these bottoms were, 5075, we're probably tilting the odds that we're going on deeper. But right now, I'd be cautious. I don't expect anything big to transcend in the markets until we start either breaking support or get a nice correction. A 3% correction that holds and turns higher again. We could probably do this. Otherwise, it's going to take us probably way out here to get there. Like if we just keep on the path we're on, keep grinding, it could be well out in the late summer, dog days of summer before we do that. Could it do that? Absolutely. It can just keep grinding. Keep grinding, keep grinding, keep grinding, keep grinding, keep grinding. If we do that, the pullback's going to be epically horrible. So be careful out there. I'm going to go be in Discord. If you want to come join me, the link is in the description down below. It's like $5 to be a supporter and get access to Discord. Otherwise, I'll see you again tomorrow morning, 9:15. Make sure you're subscribed over there. Make sure you hit the bell with the notifications. And if I said anything today that was helpful, beneficial, informational, if you find anything helpful, let me know. Leave a comment, leave a like, interact with the video. I appreciate it. Thanks, everybody. Have a great day out there.